Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and I am here on time despite the Euro matches. We had a brief talk about it on Twitter, didn't we? But nevertheless, it was an interesting match. I saw some highlights of it this morning, which is why I got to know about it. Nevertheless, let's focus on the markets, right? That's what we are here for. So the US markets and how they did. Remember, Monday was an off. So yesterday was the first trading day effectively for this week for the US markets. And while optically this looks like the Nasdaq, and the Nasdaq did have a day in the green. It was actually in the green for a better part of the day, so to say, if you will. But there was a bit of a scare in the Dow and the S&P for a brief bit in the early part of the US market trading. They were down and volatility had jumped up really. I mean, if the next chart, this is the VIX chart for 5 days, the CBOE VIX, and just look at how volatile it was. I mean, this is crazy stuff. What happened? I mean, at a point of time, VIX was up some 22%, and clearly volatility seems to be order of the day. So, and this chart shows that how VIX also was fairly choppy in that session. But yeah, I think we got all of us got to brace ourselves for volatility. I think that's the feedback that I'm getting from a lot of traders as well. If you are getting it, maybe you can tell me on the YouTube comments or Twitter comments as well. But I think a lot of traders are getting whipsawed on either direction. Tata Motors is the case in point yesterday. So many people were long, the stock saw some highs and then off 10% from the day's highs. So there is a fair degree of volatility these days, viewers, and you got to be mindful of that. Asia today, Japan started off on a weak footing. I think the rest of the pack would be maybe mixed bag, but yeah, Japan and Nikkei certainly started off on a fairly weak footing, about 1% lower. The futures are okay. The US futures are okay, and therefore there is no, how do I say, from a bull's perspective, no catastrophe hitting. But yes, you've got to be mindful of the fact that volatility move up. SGX Nifty should next come up on your screen. Just to do a quick mark of how we are likely to start off. It doesn't have too much of a bearing nowadays. Because how we end is at times markedly different from how we start off, but about 0.5% lower, and this should be acceptable as well. So that's the key thing. Now, the key thing, viewers, and the points to my mind to ponder from a bull's perspective are a few: very short term and slightly medium term and slightly long term. One, the Prime Minister's meeting on likely cabinet reshuffle today, and we got to watch out for that. Or whenever these decisions come out, whether they are large decisions, small decisions, whatever it is, but could they have a bearing? Maybe they could. Q1 FY22 result season commences from tomorrow with TCS. I think the numbers are unpredictable. If you just look at what the updates, Q1 updates have been thus far, yes, on a YY basis, they look very strong, and people will get conned into believing this is great performance. Actually, if you kind of dwell deeper, those numbers are not necessarily the best, and therefore this result season is very unpredictable and will be impacted by the sporadic lockdown. So we probably stand a chance of having a lot of disappointment. So you have to be mindful of that. And while oil prices have come off, and therefore, by the way, ONGC, Oil India will correct today. So the prices, but if we believe that the trend is higher, and if oil prices move above $80 a barrel, which they could because OPEC Plus doesn't have an agreement, then it hurts the macros for sure within India. And therefore, all of these are points that all of us should keep in mind. Quick snapshot of yesterday's trade before we get to what should be watching out for today. The MOV function on the Bloomberg terminal. Some people have asked, can you buy this software? Yes, you can. I mean, it's a different business. It's not ours, but yeah, the Bloomberg terminal is available for anybody who wants it. It's a few $1,000s here and there. So if you have the money, yes, you can. But yeah, the MOV function, if we can get up on the screen, it's okay if we can't. But yesterday, we all know that there was a bit of stress in the markets. But yeah, after 2-3 days of fairly decent market breadth, a bunch of stocks corrected in trade yesterday. And that was actually not a great sign. Most portfolios, which are mid-cap oriented, actually had a fair degree of red on the screen. So be that as it may. Okay, maybe we can't get it. That's okay. I told you why. Now, IPOs, 2 IPOs open today, and therefore they will be in focus. Watch out for GR Infra and watch out for Clean Science and Technology. For both, viewers, the anchor investor list is actually pretty solid. Clean Science and Technology finds a lot of favor when I speak to institutional investors who want a piece of that IPO. So in all probability, in fact, I'm pretty sure that if you subscribe to the IPO, unless something horribly goes wrong, or not only listing gains, there are probably gains even in the near future, because a lot of fairly eminent institutional investors like Clean Science and IPO, even at the valuations that it has come at. So therefore, do watch out for this one. If you want to know more about this, you can read the All You Need to Know copy on our website. Hear the interviews. I think Sajid would have done them. So pretty good going out there for these two. But yeah, do understand. Don't just buy it because you heard me or heard somebody else tell you. Just try and understand a bit about the company. It'll give you a conviction. You'll be able to borrow the idea. But in order to hold on to the stock, if indeed the stock corrects, you need the conviction that will only come if you do your own research. So keep that at the back of your mind. Stocks to be watched out for today. There are 3 or 4. There could be multiple others. I thought the 3 or 4 most pertinent, I'm bringing them to you. Titan, obviously the Q3 update. The revenue growth of 116% in Q1 FY22. Like I was saying, it will look very strong. But remember, April FY21 had 0 sales, and both the months of May had near 0 sales as well. But April had 0 sales. So the base effect naturally comes into play here. The watches and wearables segment saw about 280% growth. I think for me, that is probably the one thing that worked out well for Titan, because that's that segment. Of course, again on a low base, but yeah, I mean, it's done well. The revenue spread between April, May, and June, 50%, 10%, 40%. Like I said, May had near 0 sales in both the years, and this year is no different. 90% of the stores, they say, are now open. So they seem to have, how do I say, gotten back on the growth track, if you will. But of course, if you look at this on a QOQ basis, it will not look as impressive. In fact, the 2 brokers and the 2 brokerage notes that I read in the morning, CLSA maintains a sell with a target price of 1370. Morgan Stanley maintains an equal weight with a target price of 1358. So no great shakes here for Titan. If you read those notes in detail, unfortunately, I can't do right now because of paucity of time. We read those notes in detail. Everybody's saying that if you adjust it for bullion sales, if you adjust it for this, that, etc., it's probably not as impressive a quarter. So that's the verdict really when it comes to Titan. But you never know. The stock could do well. So operational update for quarter one come in. Total sales at 683 crores versus 488. The sales volumes were up about 40%. The Bangalore sales volumes up about 37%. Do watch out for Sobha, could be an interesting one. Steel stocks, I saw Steelmint report this, that the steel futures in China rose by 2% last evening on back of higher prices and output control expectations. 2 things out here, viewers. We are probably in a scenario wherein the chances of prices moving southwards are more. The question is, when you see this Q1 result season, you will actually see amazing EBITDA and profit numbers. So the question that you got to ask yourself is, will steel companies follow the pricing trend and therefore be in a corrective stroke consolidatory mode? Or will people look at the numbers, the predictability of these numbers, the reduction of debt, and say, let's get a piece of this pie because it's still not exorbitantly priced? CLSA, for example, today has come out with a note on Tata Steel. I think they've raised the target prices on Tata Steel as well. So it's a difficult question, and shameless plug out here. But if you guys want to know more about this, I think this Saturday or the next Saturday, probably the next Saturday in the BQH webinar, we're getting Rakesh Shodhara to talk about where in the metal cycle are we. Effectively, you'll get answers, or hopefully you'll get answers, and I'll try and probe him as to whether the cycle is already done and is coming off now, or is there still some juice left with the Indian context. So keep that in mind. But it's a very interesting pocket. Brokerages will still keep on upgrading the stocks because the earnings profile, because of the lower debt and higher prices, might still look very, very robust for FY22. So keep that in mind. A couple of brokerage notes that I thought were interesting, and I should bring it. Morgan Stanley's note on ONGC, while the whole street and the world is bullish, I thought it was pertinent to bring in a counterpoint as well. Morgan Stanley has raised FY22 and 23 EPS by 23% and 31%, but they are saying that ONGC is their least preferred stock as it lacks volume growth, is monetizing reserves very slowly, and has limited clarity on decarbonization plans. I think there's a CLSA note today which says that ONGC is their top pick or something like that. And of course, Chris Wood added ONGC to the India model portfolio as well. So brokerages are very, very divided. Morgan Stanley clearly not liking. There's a Goldman Sachs note on Bharat Forge, which I thought I should bring out for all of you. I thought that was interesting. They've initiated a buy. So the analysts must be new or whatever, but they've initiated a buy rating on Bharat Forge. Their SOTP-based 12-month target price is 883, implying a 15% upside. They believe the company is well positioned to leverage defense, localization, and global industrial recovery. Both of points are very, very obvious, and they expect consolidated revenue to EBITDA CAGR of 8% and 22%, versus 1% and 5% in FY15 to 20. It's an interesting note, and why I find some resonance here, because about a month and a half ago or 2 months ago, I don't remember when, I had interviewed Amit Kalyani, wherein he had on air said that the high growth phase for Bharat Forge is coming, and he apologized, saying that it should have come earlier. So he apologized to investors that it took them a bit too long, but he firmly believed that the growth numbers for Bharat Forge will look exponentially higher FY22 onwards. So, it could be interesting to understand what is the management view, pencil in your own numbers, and then try and see whether you want to follow the Goldman Sachs conviction. As I've now amply showed you through all of these trade setups in the recent past, two very eminent brokerages could have different and opposing views on a stock, and naturally only one of them will get proven to be right. So might as well do a little bit of your own research as well. Well, that's the long and short of this today. I may have missed a stock or two here and there, but I thought these were largely the most important points to be covered. Do watch out for commodities, do watch out for oil, and don't get swayed by higher oil prices and therefore go and buy into upstream, because these oil prices themselves are so volatile. Yesterday, Brent ended at 74 or something like that. So the oil prices themselves are so volatile that you don't quite know how to trade on the upstream companies on the basis of oil price movement. So that's the limited point I'm making. Stay safe, viewers. If you're stepping out, stay masked up. And if you missed one very good semi-final in the Euro 2021, tonight will be the other one. Could be interesting as well. Thanks so much for tuning in today to the Trade Setup.